Hi, I'm Joseph Tan. This is a guideline for project, individual, and group on item 1. Item 1, financial ratio calculation. The following financial ratio of latest 2 years are to be calculated for BreadTalk. Refer to the income statement and balance sheet on page 81 and 82 of BreadTalk and 2018 annual financial report. All the calculations of financial ratio are based on the BreadTalk's group level, not company level. Please refer to the following 2 snapshots of BreadTalk annual report for better understanding regarding group level. Another point, round off the answer to do decimal place. Okay. Let's look at page 81 of BreadTalk annual report 2018. This is an income statement. Look at the 2 red ticks. 2 red ticks indicates that you are to use the figure for this. So you have 2018, okay, and 2017 restated. So you'll be using these 2 figures to calculate for your financial ratio. Is that clear? Any questions so far? Let's refer to page 82, balance sheet of BreadTalk Group. There are many columns here, so you might be wondering which figures do I look at, focus on. So the one we cross, we don't really focus on that. Okay, the one we cross, you can ignore most of the groups, most of the figures here. Okay, except there's one figure, probably one calculation, they will use a bit of the figures in the year 2017, 1st Jan. But what you focus on is the one with the tick. Okay, highlight to you, focus on the one with the tick. So the 2018 in group and the group for 31st December 2017. These are the figures that you really want. Let's look at profits. The first ratio we're looking at is gross profit margin. Gross profit divided by revenue times 100%. Your answers will be given in 99.99% format. Remember to round off to 2 decimal places. Next, net profit margin is profit for the year divided by revenue times 100%. Return on asset, profit for the year divided by total assets times 100%. Any questions so far? Liquidity. Current ratio equals to current assets divided by current liabilities. The format answer will be given in the format of 99.99 times. Okay, 2 decimal place. Quick ratio, current assets minus inventories minus prepayments divided by current liabilities. Take note, this is different from your lecture notes. We have this additional of negative minus prepayments. Okay, please take note of this. Same thing, format, answer in the format of 99.99 times. Any question? Next, we look at activity ratios. Average age of inventory, in short, we call it AAI, is inventory times 365 divided by cost of sales. The answers will be given in 99.99 days. Okay, please round up to 2 decimal place. Next, average payment period, APP, equals to trade payables times 365 divided by credit purchases. Your answer is given in the format of 999.99 days, 2 decimal place. Trade payables can be found in note 21. Please refer to page 158 of 2018 annual financial report. You can find the trade payables there. The formula for credit purchases is equal to cost of sales plus ending inventories minus beginning inventory. Do not worry about it. I've done the calculation. I give you the answers to make it easier for you. Okay, so for 2018, the figures is there is 268 million. For 2017 is 266 million. Okay, there's additional remarks to help you understand. Okay, this thing is that we assume all purchases are on credit. So basically, when BreadTalk buy make all their purchases, they always buy on credit. So they do not pay cash on the first day. Okay, we make this assumption. Okay. Right. Because we can't find much information about how BreadTalk purchased stuff, but we just make this assumption to make our calculation possible. Okay. Any questions so far? Capital structure and solvency. Debt ratio equals to total liabilities divided by total assets times 100%. Remember to round off your answers in 2 decimal place in percentage. Next, we look at the times interest earned ratio is profits before tax plus interest expense divided by interest expense. Okay. Do take note, EBIT is basically equals to profit before tax plus interest expense. Any questions so far?